If you're spending more than 30 minutes a day, you're doing too much. What is going on, guys? Welcome back to another YouTube video. So in this video, I'm going to share a rule that I've implemented in my own trading, and it's made the world of a difference. And I label that as the 30-minute trade. Now, if I come to my desk every single morning, look through my notes, I look at the macro themes, I understand where markets are, I've already looked at the prior trading day. If I cannot distinguish a trade setup within 30 minutes of the day, meaning I may give myself the opportunity to and the threshold to enter the trade later in the day, that's not a problem. But if I cannot make the decision within 30 minutes at this desk, it's a no trading day. Now that is as simple as I'm going to tell myself I'm either buying dips on something, I'm either selling rallies on something. If something gets to a certain level, I'm interested. If something gets to a certain level of support, I'm going to be buying. If I do not have this information within 30 minutes of the trading day, it's a no trading day for me. Now, we're going to jump on the charts. I'm going to show you dollar yen. I have several trade setups within the past 4 weeks of this year already so far. One instance, I favored buying the dips on dollar yen on that particular day, which worked very well. And the second instance was a short position, which I actually gave in my community yesterday morning, about selling dollar yen. So one instance buying, one instance selling. But the reality is within 30 minutes, which is more or less the time of the call that I do every single morning, within 30 minutes, if I do not have a distinguished bias, it means I'm wasting my time, and it probably means I shouldn't be trading, because that leads to hopeless trading. I found myself doing this over the years, that you will trade multiple trades, multiple setups throughout the day without having a clean-cut plan, with the hope that this trade makes you a certain amount of money, gets you out a certain drawdown, and that is not the way to be trading. So folks, if I can give you some piece of advice that I have learned over the past 8 years, and it has definitely helped me, it is that of giving yourself rules. Giving yourself a clean-cut set of rules that if you do not follow those rules, there is no trade. And it has to be like that. If it's not like that, you're essentially wasting your time. So just to remind you, it is the 30-minute rule. If there is no distinguished bias, I can still enter a couple of hours later, but if there's no distinguished bias within 30 minutes, it's a no trading day. But let's jump onto the charts there and run through dollar yen. So dollar yen, looking at this on the prior trading day, it is up to me to then, as a trader, distinguish the trade starting on the daily time frame. If I know the prior trading day's closure, I can then already have some sort of clean-cut direction as what I'm going to be doing on the next trading day. But for this purpose of this explanation, we're going to go to the 30-minute time frame, and I'm going to show you exactly what I mean about the 30-minute trade. Right, so the 30-minute trade constitutes of me looking for a trade in the first 30 minutes, but it also is the trade setup on the 30-minute time frame. Now, 30-minute time frame, very clean, inverse head and shoulders trade. Yeah, it's clearly obvious. Dips on dollar were being bought throughout the whole month of January 2024. I had to put the date out there in case you're watching this in like 2026 or something. It was January 2024. Dips were being bought on dollar. We had some unwind over the festive period. And yeah, perfect trade on dollar yen. So I got into this position. When I got into this position, I already knew the morning of that day, I want to be buying dips on dollar yen. Right? So you want to try and keep that in mind. We'll quickly run through the bearish instance, because I do feel if you're watching this live, right, you could be in an opportunity to sell some rallies. So looking at this then on the prior trading day to make it more relevant to the market, so you can go ahead and follow along if you're watching this right now, we can see a clean bearish reversal here at the high. Now you can go ahead and draw in some levels of support and resistance in and around 149. We clearly came back into 149, 148.50 was a very, very big pair for dollar yen. We have had the Federal Reserve recently, at the time of shooting this video, do share some I won't say super dovish comments, but there is comments suggesting that Fed Chair Powell and his committee are looking at further cuts this year. Now, I know there was a bit of an unwind, right? I know there was a bit of an unwind, but the reality is they're going to have to cut. The reality is they remain extremely data dependent. And the reality is, folks, I've said reality too many times there, but the reality is, again, that they remain so heavily dependent on the data that if there are slight discrepancies in the amount of data, dollar's really going to get sold, in my opinion. So the trade on dollar yen, we'll go to the 30-minute time frame for the explanation of the 30-minute trade. And yeah, beautiful structural play there on dollar yen, where these red lines was ideally what I was looking for on the trade buy. So we're looking for a rejection before that correction and then having that continuation in that direction. You can obviously use a Fibonacci play on these trade setups. All you're trying to do is sell the rallies. I'll show you on the bullish instance here as well. You can really just fib the low of the impulsive move to the high of the impulsive move, and you want to essentially be buying the dip or selling the rally into key areas of interest. So in this instance, 61.8, 78.6 are my preferred metrics that I trade within. If you're trading ICT, it is the premium. I'll be doing an ICT review soon, by the way. But looking at dollar yen, yeah, beautiful example. You know, you could have done the same thing over here. You take the low, the high of the impulsive move to the low of the impulsive move, and you have that opportunity where the rallies were sold over there straight into the previous lows. Perfect trade, actually. And I do think there's going to be an opportunity again, right? I do think there's going to be another opportunity. Oh, let's close that. Where we're going to have another rally on dollar yen, in my opinion, over the next couple of sessions. I like 147. If I had to put a number on it, 147 happens to be the number that I favor. We could be involved in another short opportunity on dollar yen. This would be looking for us to take out 146, right? 146 was a downside target for me when I was analyzing dollar yen a couple of weeks ago on my live calls, where I did favor this move into 146 at some point. We've come and tapped 146. I'd obviously like it to come through 146 and then we'll review. But to summarize this video, folks, I'll try and keep it as short and sweet as I can. You want to give yourself a set of rules. And my set of rules currently is, if I do not find and distinguish a trading setup in 30 minutes, that means I'm going to be over trading. I'm going to be recklessly trading with the hope that a trade will play through. And that is not how trading should be. If you have a high probability value setup, all your boxes are ticked, that is going to appear in front of you within 30 minutes for sure, or in my opinion anyways. But that's worked a lot for me, so I highly recommend you do that for yourself. Drop down in the comments below what you want to see more of on this channel. Don't forget to give me a thumbs up and subscribe to the channel. Turn that bell notification on, and I will see you on the very next video. But like always, my friends, keep going. Peace out.